Crypto markets rally on hopes that Trump will soften his stance on tariffs. We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market, all in under 30 minutes. We've had weeks of down starting off in February and March, Simon, but finally a bit of optimism creeping back into the market.
Certainly seems like it. I mean, for weeks we've been saying it's a bit boring of late, not much to report on, but I guess people like to hear good news as much as they hear bad news. And so good news moves markets in the right direction. And I think that's a good indicator that there is some strength left here. If good news is moving markets up, then, maybe the bull market's still on, hey?
Yeah, for sure. I think that period of resetting has been a big theme, I think, last few weeks, and we'll get into it a bit more with signs that we are sort of sentiment is moving and whatnot. So yeah, for anyone who's been out of the loop, BTC up 4% the last week, ETH, Solana up a bit more than that, as you would expect. And yeah, over the past, to start off this week, we've had, renewed optimism in finance, like in stock markets, as well as, and that's bled into crypto. The big driver of that, as I've got up on my screen here, is just hopes that Trump is going to be softening his stance on tariffs, as we've been talking about for a number of weeks on this podcast and to Collective Shift members. Really, we've been just saying, hey, you don't really have to watch anything other than April 2nd. That was the day that Trump had always said he was going to announce, a slew of tariffs on different sectors and individual countries. He's sort of started to, or at least he's had some language that has sort of suggested that, hey, he might not actually implement all of these tariffs on day one. We've started to get some signs that best case scenario, some countries either don't get any tariffs at all, or they get sort of a watered down version of that sort of comes into effect much later than April 2nd. So he's been calling it Liberation Day, April 2nd, very Trump sort of strategy of just labeling different things, building some hype around it. But yeah, I suppose at the end of the day, stocks and crypto have rallied because I think it was just a lot of negativity, or a lot of expectations were built into this being just a very bad event for the global economy and for markets. I still think, and I think the market still thinks, hey, it's a decent chance it'll still be, a negative event, but hey, there is some signs that, it won't be as bad.
I think he's just playing the market. He's really good at that. So I kind of suspect that I think we will get to that date and we still will have some tariffs in, because I don't think Trump makes a big song and dance about this and does nothing.
Yeah.
That just doesn't seem to be his style. So I think there's going to be some tariffs that are in play, and I think that's going to spook the market. And so coming to that day, it'll probably be bearish, I guess, temporarily for the market, because, he was being so good about it. He was saying he might not do this, he might not do that, but then he did implement things and everyone goes, oh no, and starts selling again. So I do think we could see, a bearish day. Is that like a reversal trend in general? I don't really know, but talking soft, he's playing his fiddle, playing the markets to a degree. No one really knows what's going on. I think we just wait and see what happens on April 2nd.
Yeah, that's it. I think I personally wouldn't be spending much time sort of, trading based on these sort of news reports that are coming out. Things can change just as quickly. And again, just wait till the actual date is very much, I think, an investor's approach rather than being a trader following these headlines would be, just so much uncertainty, which is, not an area we're sort of dabbling in anyway. So I think, so April 2nd, still the date to watch for sure, but certainly getting a bounce back in markets, something that may have contributed to that. Definitely Trump was the biggest talking point there. We had the Fed, their announcement last week. They, as expected, held rates steady, and then they also sort of, brought down their QT, so quantitative tightening. They sort of lowered the pace of that, which, outcome of that is, ultimately a good outcome without getting into the ins and outs of it. It's a sign that stock and crypto investors really like to see. So they should be wrapping that up sometime in 2025. And then we also saw just no change in sort of the expectations of the central bank in terms of how much they're expecting to cut rates in 2025. they do these quarterly updates of their projections, and they're still expecting, there's been no change in that. So they're still expecting, 225 basis points, so about 50 basis points, bringing down interest rates in 2025. So that's unchanged. So yeah, ultimately we are still in this phase of, I guess, better, or I suppose cheaper money, quote unquote, or cheaper cost of money. And that's ultimately, really good for risk assets, all else being equal. So yeah, it brings us to signs of, maybe the market pricing in the worst, Simon, and maybe, realizing it might not be as bad as we just talked about. What are some different indicators you're seeing that, maybe all that pessimism is sort of reached its local, I suppose, climax?
Yeah, I think on the Fed Reserve announcements, I think that was more the price mover than Trump. I think Trump's words have just got people excited sentiment-wise, but the Fed reducing its quantitative tightening, so it's getting closer to them not pulling money out of the system, basically. And then people then extrapolate that, they're closer to then putting money back into the system. Maybe, I don't know. But I think that had a bigger influence on price than Trump. But Trump definitely can move the sentiment very strongly. So we saw the S&P 500 and the NASDAQ have like 4 weeks in a row weekly downtrend, and they've now put in a green trend. So they've had the fifth week in there was actually prices started going back up, which is kind of more common in the stock market. They don't have multiple weeks red for that long. And so those turning green, I think, has turned people positive. And you can see that as well, because when we look at the ETF flows into crypto, they've finally actually they've had a 5-week downturn and now of outflows, so money leaving the system. And we've actually finally starting to see some money going back in. So that's TradFi using ETFs through like BlackRock and things like that. 5 weeks in a row of outflows. That's people, basically taking risk off. We've finally seen people putting risk on. And, it's quite a large amount of money that came out. I don't think we've had a streak of money coming out of the ETF products like that for, it could be the inception. I don't know, maybe I'm making it up. But looking at that graph that Matt's showing, that it is the biggest in the longest period of time of outflows from these products. So that's positive news. That means TradFi is taking risk on again, and they're going back into these markets. And so these ETFs are global. It's not just the US ones. But I think the thing that really made a note for me is that it's the Bitcoin ETFs that have actually made most of the impact here, and the ETH ETFs are actually still in outflows. So there's no net inflows into the Ethereum ETFs yet, which I guess is the Ethereum sentiment in general. Like, people just really are finding it hard to invest in Ethereum right now. The narrative is so bad that even TradFi can't seem a reason to get into it, which is concerning, but I guess not understandable given the state of the ETH community at the moment.
Yeah, for sure. It's like another month, the same sort of, I guess, take or analysis that we've been talking about at Ethereum for quite a while. Is just they're in a state of flux of still trying to scale, and in between. So the investment case for something like ETH continues to be a bit contradictory or confusing. Doesn't have that simple message that we've been talking about for a number of months now. So
you know what my take on ETH is, though? This could be a hot take for us to have here. Is just simply that maybe we have found out how much a layer one is actually supposed to be valued at.
Yeah.
People might sit there and go, oh, what's going to be $1 trillion asset, all these kind of things. Well, there's not that many $1 trillion assets that exist in the world, and without significant use case. And, we've talked about it many times, with the most significant use case of blockchain so far has been stablecoin transactions. If that's all blockchains end up doing, then Ethereum is probably overvalued. And so I think that's what we're looking at. And I think for other listeners out there, if you're looking at your insert XYZ layer one here, and you're thinking about how much you can go to, if you're thinking it's going to eclipse the market cap of Ethereum, that's probably you being overly confident there, because I think we are starting to price in how much a layer one should be worth.
Yeah, well said there. $250 billion market cap still, after just being decimated and with all the negative sentiment. That's a great point you do bring up there, Simon. In terms of other signs of market turning around, it's also saying that same sort of message. Got some data here from Kaito. Again, just their own I guess gauge of social media, like language and things like that, which tracks sentiment. Unsurprisingly, given what we've just said, they are also, I guess, seeing a change in their own version of market sentiment there on the chart. So you can see it picking up again after really bottoming out throughout February. So yeah, that's just yet another data point. But yeah, ultimately, market sort of side of things, really, this week is going to be, I guess, one of the more important ones that I can remember in recent memory. Just with a lot of news headlines likely to come out about the tariffs and whatnot. So yeah, in terms of other developments as well that we've seen in the past week in the crypto world, just another continuation of a trend of real world assets, or RWAs, continuing their growth. So we've now seen Fidelity, so one of the largest asset managers in the world. They've been involved in Bitcoin for about 10 years now, but expanding into crypto in recent years. And they have now, looks like they're putting together all the necessary steps to launch their own essentially on-chain product similar to BlackRock, which has had their BUIDL fund, essentially allowing people to get exposure to treasuries ultimately. So a really historically safe sort of source of yield by moving stablecoins into these products on chain. And it looks like Fidelity is seeing the success of BlackRock's product, and they are looking to launch their own. Notably, they, like BlackRock, will start by deploying on the Ethereum mainnet itself. And I dare say they will do what the other two have done in terms of expanding to other blockchains, either by their own discretion or probably also through different grants and funding from other layer one foundations who are wanting to pull these very reputable names across to their own blockchain. So as we've always said, stablecoins and even tokenized assets and whatnot are clearly growing. I think it's a very obvious use for blockchain technology. I think as retail investors, the sort of open-ended question remains, how to best get exposure to these. And if the way is still just layer one blockchains indirectly, then it doesn't leave too much available to the average retail investor. But I think monitoring adoption of real world assets and stablecoins to look for potentially some other investment opportunities that we're not thinking about at the moment will be something that's worth doing, I think, in the years ahead.
Yeah, for sure. I mean, real world assets, is a fancy term to just say traditional finance going on blockchain. Really, that's what it is. We know that that's what blockchain is kind of good for, is that transparency and the ability to exchange quickly and fast. And so it makes sense that these TradFi companies are starting to look at it. As you say, it's really not that investable other than the layer ones. And I even have a take in that, do these companies really want to put something on an immutable blockchain to a degree? I kind of think that TradFi and people in general, when they invest in these things, like to have the trust. What happens if something goes wrong with the blockchain? They can't revert it, kind of thing. And so I suspect that in the future we may have more like Ethereum is well suited for this, to have a private layer 2 that these things run on, these reward assets run on, where they do have control of the ledger and they can revert that. And so it's not this beautiful permissionless utopia that a lot of people in crypto envision, but it's actually how a real world use case can actually be put on blockchain, because these companies still want to be able to have control of these things, and they want to be able to, control Z when something goes wrong. So that's kind of where I think these things might go to. So it's hard to find how to invest in this, but if people are using blockchain, this is good for the industry in general.
Yeah, share that takeaway there as well. And we have seen RWAs, real world assets, sort of creeping up towards that $20 billion milestone. A big chunk of that is in, about 60% of that is in tokenized sort of private credit. So again, not really accessible to the average person, but again, just a trend that's great to see in general. In terms of altcoin updates for the past 7 days, things have been pretty quiet throughout March. There were some notable, talking points, in the last 7 days or so. I did see that Ripple, or XRP, actually rallied by nearly 10% in a few hours after their CEO sort of declared that their long-standing lawsuit with the SEC has come to an end. I've yet to see sort of official confirmation of that just yet, but I suppose if they're willing to put that out there, knowing the legal repercussions, it must be true. And it would be consistent with all the other developments that we've seen from the SEC recently anyway, in terms of ending their lawsuits and their investigations into a number of crypto companies. So yeah, this legal battle started in 2020, I believe. So yeah, 5 years later, there's still a part of that case still going, and that looks like it has now ended. So XRP really rallied after that. Also saw BNB Chain. They've announced, saying just last night, a big $100 million liquidity program. We've seen activity on BNB Chain really pick up in recent weeks, as well as Sonic, as well. Another layer one blockchain that has, quite large incentives at the moment. For anyone from an investment lens, I would always caution, reading too much into the activity and the on-chain metrics when these liquidity programs are ongoing. They're a great way to capture activity and build awareness, essentially a marketing exercise, really. And I think as investors, it's important to acknowledge that and track the activity. And then importantly, when those liquidity incentives start to taper off, as an investor, it's really a green light in a way, or it's a great sign if you still see activity more or less staying the same as when those incentives were on. Otherwise, history suggests in the crypto space that that's a very rare event. Most of the time when these liquidity programs end, you see a dramatic sort of decrease in on-chain activity. So I guess just a quick, bit of an investment tip in crypto, just always try your best to look into the reason for any really significant increase in activity, because it's often the equivalent of sort of user acquisition or marketing, which in this case, BNB Chain, $100 million liquidity program is quite a large sum for sure. So it definitely will bring incentivized users across.
Yeah, I don't mind what you just said there. It's called marketing, and I don't mind that. Like, it's how they bring people in, because what better incentivization to bring people in than, hey, free money to a degree. But I mean, this is a degen play, and so the struggle that these chains have when they've all done these before is that what happens when the degens want to move on because the yields aren't there anymore. And so for a layer one to have real growth, they need to have developers come along and real users come along to actually want to use those products. And so it's kind of like they're trying to scale and bring those things on board at the same time during these liquidity programs. But as you say, a lot of the time they don't get that adoption, and everyone moves on to the next shiny red car coming past.
Yeah, that's it. In terms of last week in March, again, what to look ahead? Definitely, it's just headlines to do with tariffs. If you're more of a long-term investor, then hey, it's not even that important. But I think for someone like us and other investors who I've been speaking to who are waiting to sort of use some of their dry powder, I think monitoring the next sort of week or two will be very, very important there. So I doubt there'll be anything that's more price sensitive than that in the week ahead. In terms of just underappreciated or overappreciated, I'll just shout out Paradigm. They worked with another company to put together this report on just TradFi interest in using blockchains like we were talking about earlier, and public blockchains more specifically. And they also really targeted the report on usage and adoption of DeFi or decentralized finance. So that's one that I have got saved to read into myself, because I'm interested to see, okay, why are they actually using these? Is it for cost savings and other benefits that we spoke about? And what are the names involved? So I'll link to that below. I saw a lot of people saying some good things about this report, so I'll link to it below. But that's one that I have to look into this week. What did you have, Simon?
So from an overappreciated perspective, people shout how good token buybacks are from projects, and I think the biggest one of late has been Radium on Solana. decentralized trading platform there doing token buybacks. But Messari put out a really interesting report the other day about how all these token buybacks are not working and prices are still crashing regardless of these programs in place. So the idea of a token buyback is the product is making profits, and with those profits, they go and buy the token back off the open market and burn those tokens. So therefore decreasing the supply, which should increase the price overall. But I don't think I guess the answer is they're not buying enough to outweigh just general market selling pressure. And so while, it is a good thing, it's better than nothing. But I think what my take on this is just simply that people don't want token buybacks because they don't understand it, but they understand yield, and TradFi understands yield. So if these products like the Radium were giving profits to token holders in a yield, I think that would probably do more for price appreciation because people then could attach a yield to the token price. But that brings it into that big scary word that everyone's scared about in crypto is it would be a security. So that's why none of these projects do that, because they don't want to get into that battle. But I think clearer regulation around this, where there's some kind of new form of what a security is probably needs to occur. So regulation will solve this problem, and these things can stop talking about token buybacks. They can start talking about, hey, this token has a yield, and I think that will bring more people on board because people understand yield. They don't understand a token buyback as much.
Yeah, definitely. I think it's sort of been an unspoken thing as well in the industry, or among some of the investors I've seen, talking about this concept of token buybacks. It's almost a bit of a careful what you wish for sort of thing, because as we well know, and as some of you would know, a lot of the protocols in this space, they're not that successful in terms of the revenue generating, how much revenue they bring in. There's a handful that are doing a really good job, but the tail sort of, it quickly falls off after that. So if a project announces a buyback, once you sort of run the math and sort of calculate how much in dollars they're going to be buying back, with the percentage of their revenue, it often, is a very small amount. And then if you compare that to the valuation and sort of apply some of that modeling, like that simple sort of discounted cash flow sort of modeling, or things like that are like in the stock markets, then you sort of realize how in many cases overvalued a lot of these sort of projects are. So that's another caveat with buybacks. You sort of is the project actually really interesting, or has it got product market fit? That's also important to look into.
It could go in the reverse. They can hide that, because if the yield, this token now has a yield, it's a security or whatever, but it has a yield and the yield is 0.001%, then nobody's going to like that either.
Yes, that's also
that's probably worse. So at least they can hide. We're buying back. No one understands that and can't really value it. But hey, you get a yield of this tiny fraction, then people, oh God, it's not a good product.
Yeah, I see what you mean. Yeah, that'd be good as well for just people understanding. Either way. So no, let's see. It looks like it'll be a big week either way, to the upside or downside. I think volatility will be the theme of the next week or two for sure, with Liberation Day, as Trump's calling it. So yeah, we'll see how that's going, and we'll check in next week. But if you are looking for more insights on the market, see our revamped weekly shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.